Welcome to Crypto Pulsar's channel. Let's take a look at Bitcoin's latest market structure. Yesterday, Bitcoin broke below 66,000. If the market continues to follow this rhythm, Bitcoin's price will have a chance to break below the previous low at 60,000 dot in today's episode. We will analyze through Bitcoin's downside momentum, some fundamental deductions, as well as core candlestick analysis. Roughly last Saturday, when it rebounded to 71,000, I sold. And why was that? Because I referenced the previous Bitcoin wick down. That dropped to around 80,006. So how much did it rebound due to inertia? If we take out the percentage, it was approximately around 21%. That was the rebound high of that segment. Using the exact same theory to project, let's take a look together. Around the midpoint node, a rebound of about 20%, so selling around 20 to 21%. Indeed fits the inertia-based projection. As for the next move of Bitcoin, if it continues to grind down in this rhythm, personally, I think the round number of 60,000 may not be a very strong support. Let's first look at the weekly candlestick level from the bear market bottom. Around the low in November 2022, at that time, it was roughly 15,500 USD, rising up to 126,000, drawing a Fibonacci 0.618. That gives a level around 58,000. Quite a number of analysts are currently waiting for Bitcoin's price to naturally decline toward around 58,000 before considering entering to go long on Bitcoin. And this is actually a reasonable projection because around this level, we also mentioned in previous videos, the 200, and today, we will use the 200-week moving average. The 200-week average price is actually also around 58,000 dot. So right now, besides the 0.618 level. And the 200-week moving average price, what else is there? If we draw a curve from the bear market bottom upward, it is also slightly below this range. If it were to be touched at this moment, it would be roughly around the mid 54,000 range. So recently, especially if market makers smash the price, these nodes may become a relatively good support zone for you to gauge the next rebound trading opportunity. As for me, the tool I would use is spot positioning, and I will definitely think in terms of market inertia. The reason is simple. Uptrends have upward inertia, downtrends have downward inertia, since the market makers are essentially the same players. Their thinking patterns tend to be similar for the vast majority of people who lack short-term trading ability. A bear market is about gradually building positions and waiting for the Bitcoin bull cycle. In other words, if back then Bitcoin dropped to around 20,000 or 30,000 ST and you simply bought spot with conviction, what would your potential return be? Possibly 4 times. If you trade futures, you may not dare to size large, but from a spot perspective, you actually can accumulate more. So in a bear market, the key is to survive and wait for the next Bitcoin bull market. For short-term futures traders, 2025 is definitely a harvesting year. Because last year's market was quite brutal. So my suggestion is, in 2026, if everyone truly wants to consider bottom fishing in spot, you must understand 2 concepts. One concept is a staged bottom, which is not the true bottom. The other is the real bottom. No one knows the real bottom, but staged lows are like these sharp wicks. For example, if next time it directly drops to 58,000, I would think the probability of it becoming a staged bottom is very high. Then it might wick to around 55,000 to 56,000 and directly rebound by 10,000 points. There is a very high probability of that. So in a bear market, if you want to do short-term trading, you need to pay attention to staged bottoms. If you are looking for the true bottom, at this moment, there is no way to fully project it. But from a candlestick perspective, if Bitcoin drops to 40,000, I can close my eyes and buy half a position. All right, let's take a look. Why might this bottom be tested again, actually? From a fundamental inference perspective, many spot trading pairs have not broken below 60,000. You can check the exchanges you use, including when I checked Coinbase. The lowest price seemed to be 60,001 USD. So what does this represent? It represents that the liquidity at the round number of 60,000 has not been fully taken. You could say that last time, many people placed orders at 60,000, so The previous buy orders were clustered around 60,000. So market makers did not want to absorb them. They just created a small wick. And then the price rebounded this time. If it drops back to 60,000, we'll lure those people in and then directly dump to 55,000 before rebounding. That is a conspiracy theory, not making a definite conclusion. But in any case, the round number of 60,000 has not been fully taken, and I think every time Bitcoin, especially during bear market declines, these round number bottoms left behind.